In this video, we're going to be talking about time frames, and don't worry, this is going to be a very quick video. So in the previous lesson, if you remember, we said we have types of traders. We have day traders, we have swing traders, we have position traders, and we have the scalpers. So when you are doing analysis in the market, you use different time frames to do analysis. So for example, let's say you are a swing trader. A swing trader takes trade between 2 days and some weeks, right? And when you are doing analysis as a swing trader, you don't want to be using 15-minute candles. Remember, it takes a particular period of time for our candles to form depending on the time frame. So on the trading view chart now, you can see I have 15 minutes, 30 minutes, 45 minutes, 1 hour, 8 hours, 1 day, 2 day, 3 day, weekly, and monthly. Right now I'm on daily, and it means it takes a day for a candle to form. So each candle represents a day. So this is October 1st, this one will be October 2nd. Do you understand? So right now I can easily change it to 4 hours, right? I can easily change it to 4 hours. It means each candle takes about 4 hours to form. You can see the time here. So for this particular candle that is forming, it remains 3 hours 57 minutes for it to complete the formation. Do you understand? So as a swing trader now, you want to be using daily to do your analysis, because your trade will take a few days before you take profit or before your trade gets stopped in the market. So for a swing trader, you want to be using daily candles to analyze your chart. Do you understand? For a position trader, you want to be using weekly candle, because it doesn't make sense when your trade is going to last about 6 months to be using 15-minute candle to do your analysis. Do you understand? So for a swing trader, you want to be using daily to do your analysis, and you might even use 4 hours to do your entry and your exits in the market. Do you understand? For a scalper can use as low as 1 minute candle to do his analysis, because his trade is going to take minutes. So you want to break that time frame down to 1 minute to 2 minutes to see what's happening in the market for him to be able to take his trade. So for a day trader, for example, you can use things like 1 hour. So it means it will take 24 candles to form a daily candle. So that will break a day down for you to do analysis. So if you are going to analyze yesterday's price action and 2 days ago price action, if you change it to 1 hour, you are going to have about 48 candles to analyze. So different time frames for different traders. If you are going to be looking to day trade, you might want to use 4 hours to do your analysis. You might want to use 1 hour, and you can even use 15 minutes to do your analysis, depending on what is comfortable for you. Do you understand? So that is all about time frame. And remember, before you take trades, you want to check the higher time frame first. You want to know the general direction of the market before you take trades. Remember, I said in an uptrend, you want to take more of long trades than short trades. And in a downtrend, you want to take more short trades than long trades. For long trades, when the price goes up, you make money. But for short trades, when the price go down, you make money. Do you understand? So that's how it works. So you want to check the weekly first before taking any trade. You want to check the direction of the price. I can see that the price is forming lower highs on the weekly. So on the higher time frame, the price is already dropping, because we already have one high here, and then a new lower high is already forming. And once you start having lower highs in the market, what will happen? It means there's already a downtrend that is forming. So the only reason why I'm going to be bearish, when I say bearish, it means I believe the market will drop for a long period of time. The only reason why I will be bearish on this chart right now is if we have a market structure break. So if the market structure breaks, so the only way we can have a market structure break is by turning this current low, which is this place. So this is our support, right? Is by turning this support level into resistance. So anytime the price breaks this region, this current support, and turns it to resistance is when you have a break in market structure. So now we have been having higher lows, we have been going up, right? We have been having, this is a low, this is higher low, this is higher low, this is higher low. On a normal day, we are supposed to form higher low if we want to continue going up, but what is already forming is lower high, lower high. So by the time we break through this price range and we turn this current support into resistance, so by the time it breaks through, it will start serving as resistance, so price won't be able to go up easily, and then we can start having our downtrend. Do you understand? So until this support breaks, we can't say we are in a downtrend yet because the market structure is still active. So once we break through this support and turn the support to resistance, then we can say there is a market structure break. So after the breakout, the retest of that place is where you are going to take a short position, because there's another lower high that just formed, which represents a downtrend. Do you understand? So that's basically all about time frame. You can use daily time frame as a swing trader. You can use 4 hours as a swing trader. When you're a day trader, it means that you are going to open and close the position between 24 hours. So you want to be breaking your candles down into hourly candle, because you can't analyze just one candle as a day trader. It doesn't make sense. So as a day trader, you want to break down daily candle into 24. You want to break down daily candle into 48 candles. Do you understand? So you can analyze what happened during a particular day. So for a position trader that is traded last between months now, you don't want to be analyzing 15-minute or 1 hour candle, because you have hundreds and hundreds and hundreds of 1 hour candle you are going to be analyzing. So you don't want to give yourself that kind of stress. You want to be using a daily candle or weekly candle to analyze your price action. So that will be all for time frames, and I hope you understand it. Daily traders use hourly candle to trade. Swing traders use daily and 4 hours, and then position traders, they use weekly, daily, and even 4 hours for entry. Remember, scalpers too, they use about 1 minute to 2 minutes, even few seconds to trade. So that's basically all about time frames. I hope you understand it, and I hope you guys are taking note of this. We'll see you in the next video.